Welcome to Smart Swing Traders. Please subscribe to keep up to date with our upcoming video from our channel. A moat is a defensive structure built around castles, fortresses, or towns in the Middle Ages, usually a deep, wide ditch filled with water. The primary purpose of a moat was to provide a defensive line against enemy attacks. Here are some key details that explain the historical significance and function of moats. 1. Defensive barrier moats served as a barrier to prevent attackers from reaching the walls of a castle or fortress. The depth and width of the moat made it difficult for enemies to cross, especially under fire from the defenders. The presence of a moat served as a psychological deterrent. The difficulty of crossing a moat, often combined with other defensive measures such as walls and towers, could deter attackers from attempting an attack. In many cases, moats were filled with water from nearby rivers or streams. This not only made them more effective as barriers, but also provided a reliable source of water for the castle's inhabitants during a siege. 4. Waste disposal. Some ditches were used as a means of waste disposal. The running water carried away sewage and other waste, helping to maintain hygiene within the castle walls. 5. Symbol of power. A ditch required significant resources and labor to build, and it became a symbol of the wealth and power of the castle's owner. It demonstrated the lord's ability to protect his domain and people. 6. Variations. While many ditches were filled with water, some were dry. Dry ditches or ditches were more effective in blocking the advance of siege engines and troops. In addition, some ditches had wooden posts or other barriers to further deter attackers. 7. Evolution. Over time, as military technology advanced and the nature of warfare changed, the effectiveness of trenches diminished. The advent of gunpowder and artillery made traditional fortifications, including trenches, less feasible. However, the concept of using natural or artificial obstacles for defense continued in various forms. In short, historical trenches were an important part of medieval defensive architecture, providing practical and psychological advantages for defenders. Their design and construction reflected the strategic thinking and resourcefulness of the period, and they remain a fascinating feature of historical military engineering. What is an economic moat? An economic moat refers to a company's sustainable competitive advantage, which protects its market position and long-term profitability from competitors. The term was popularized by Warren Buffett, who likes to invest in businesses with strong moats, because they can generate higher returns over the long term. Characteristics of a strong moat. Difficult to imitate. Competitors cannot easily copy the advantage. Long-term sustainability. A moat provides an advantage for decades. High profitability. Companies with strong moats often have higher returns on capital employed, ROCA, and returns on equity, ROA. Types of economic moats. 1. Brand power. Brand name. A well-recognized and trusted brand allows a company to charge premium prices, retain customers, and reduce marketing costs. Examples. Apple, global, people pay more for iPhones because of brand value. Titan, Danish, India, premium jewelry brand trusted for quality. Asian Paints, dominates the Indian paint industry with strong brand recall. How it protects the company. Customers associate quality, reliability, or status with the brand, making them less likely to switch to a competitor. 2. Cost advantage. Low cost production and operational efficiency. Companies with low production or operational costs can undercut competitors while maintaining profitability. Examples. T-Mart, Avenue Supermarts, achieves lower costs through efficient supply chain management and owning real estate stores instead of renting. Reliance Industries, one of the world's lowest cost refiners, giving it an advantage over competitors. ITC, uses its own distribution network, reducing logistics costs. How it protects the company. Competitors struggle to match pricing without losing profits. 3. High switching costs. If customers find it difficult, expensive, or inconvenient to switch to a competitor, the company incurs a loss. Examples. Banks and financial institutions, HDFC, Kotak Mahindra, customers rarely switch banks due to paperwork, bundled services, and trust. Microsoft Office and Google Suite. Businesses follow them because switching requires retraining employees and migrating data. CDSL and NSDL, depository services where customers often do not switch due to bureaucratic procedures. How it protects the company. Retains customers for a long time, ensuring stable revenue. 4. Network effect. The value of a product or service increases when more people use it, making it difficult for competitors to attract users. Examples. IRCTC. India's only train ticketing platform. More users means more efficiency and trust. Facebook and WhatsApp. People stay because their friends and family use them. Visa and MasterCard. More merchants accept them, which leads to higher user adoption. How it protects the company. A competitor will need a huge user base to challenge the market leader. 5. Regulatory or legal moats, government protection and patents. Government regulations, exclusive licenses and patents protect companies from new entrants. Examples. IRCTC. A monopoly in railway catering and online ticket sales. Sun Pharma and Drive. Reddy's. Patents protect their exclusive rights to manufacture certain drugs. Power Grid Corporation. Operates under government regulations with limited competition. How it protects the company. Competitors cannot enter the market without government approval or patents expiring. 6. Efficient scale, natural monopoly or geographical advantage. A company dominates a niche market because there is not enough demand to support multiple competitors. Examples. Larsen & Toubro, L&T. Specialization in large-scale engineering projects means limited competition. Hindustan Zinc. Leading player in zinc mining, benefits from high barriers to entry. NHPC and NTPC. Government-backed power producers with economies of scale. How it protects the company. The market is too small for multiple competitors to enter profitably. How do you identify a company with a strong moat? 1. High ROA, return on equity, and ROCA, return on capital employed. Companies with strong moats often generate higher returns on capital than their competitors. Look for a ROA of more than 15% and a ROCA of more than 20% over several years. 2. Consistent profit and revenue growth. A moat should protect a company's profitability even during economic downturns. 3. Pricing power and strong profitability. Companies with moats can charge higher prices without losing customers. Compare gross profit and operating profit to competitors. 4. Low debt and strong cash flow. A truly moat company generates enough cash to fund its own growth without taking on excessive debt. 5. Market dominance and competitive position. Leaders in an industry often enjoy a scale advantage that strengthens their profitability. Why does trench investing work? Investing in trench companies can provide consistent, long-term returns because they fend off competition and maintain high profits. They continue to grow even in economic downturns. They generate strong cash flows, making them financially stable. Warren Buffett famously said, "The key to investing is not to assess how much an industry will impact society or how much it will grow, but rather to determine the competitive advantage of any company and, above all, the sustainability of that advantage." Views and opinions mentioned in this video or comments in the past are present under the banner of YouTube channel, Swingtrader. It's meant for educational purpose only. Investing and trading in the stock market are subject to the market risk. We are not SEBI registered analyst or Nasdaq registered analyst. Consult your financial advisor before taking decision. Swingtrader is not responsible for your profit or losses. The sole purpose of this content is for knowledge and awareness of the share market, so you agree that we are not responsible and not liable for any legal action. Hi friends, if you like this video, please like, comment, subscribe and share to your friends. Thanks for watching.